Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the TMA Centered Bands Indicator. Alright, the TMA Centered Bands Indicator is a custom indicator, so you will need to download it from an external source, and after that you will need to add the indicator to your MetaTrader indicators library. After you've done that, you can then use the indicator on your chart. So I am going to be adding the indicator to the chart right away. Okay, so this is how the indicator looks like, the TMA Centered Bands Indicator. All right, it's quite a versatile indicator. It's designed to help traders identify the overall trend direction. As we can see on the chart, it helps you to identify the trend direction with ease. All right, now this indicator actually works by plotting three triangular moving average bands. Okay, as you can see on the chart, it has an upper band and it has a lower band. Right, the upper band is red in color. You can see the lower band is green in color, and then the middle band has both red and green color. It changes color. The middle band changes color. Okay, now this indicator actually helps you to visualize price fluctuations between the bands, okay, making it easier to detect when a trend changes direction. All right, the bands actually adjust based on price movements. Okay, adjusts based on price movements. With its clear and structured approach, the TMA Centered Bands Indicator is quite ideal for traders who want to make their chart analysis even easier. All right, now how do you use this indicator to identify good trading opportunities? Looking at the chart, we can see that the red band, which is the upper band, is serving as a dynamic resistance. Okay, the upper band is serving as dynamic resistance. So most of the times when price gets to the upper bands, we have a rejection. As we can see here. There was rejection here and here as price got to the upper band, which was serving as dynamic resistance. And you can see even in this uptrend, we can see we had a bullish trend here, right? The upper band kept on serving as dynamic resistance, while the lower band, which is the green line, keeps serving as a dynamic support, both in a bullish trend and even in a bearish trend as well. As we can see, even in a bearish trend, the red line serves as dynamic resistance, while the green line serves as a dynamic support. Now, this indicator provides insight into the potential strength in the trend, right? When the trend is getting stronger, okay? Because in situations where you have an increase in volatility, right? You have an increase in volatility, you would likely find the candlesticks pierce through one of the bands. If it was a bullish momentum that was intensified, you likely see the price pierce through the upper band, as you can see that happened there. As you can see that happened here again, and as you can see that happened here. Okay, that happened here before we now had an increase in sell pressure. There was an increase in bearish momentum here, and you can see it pierced through the lower band in this case. So when you have the price around the upper band, look for sell opportunities. All right, you can watch out for bearish candlestick patterns. Watch out for any signs of a bearish move. So once the price hits the upper band and you notice a bearish candlestick pattern, you can enter a sell trade. For example, you can enter a sell trade around here after this bearish engulfing. After entering a sell, you set your stop loss above the swing high, and then for your take profit, you can decide to wait for the price to get to the lower band, which is the green line. But sometimes the price might not pierce through the lower band. It might not even hit the lower band. So just watch out for any reversal pattern. Okay. or you can decide to use other indicators to confirm your exit. For example, you can decide to use the RSI. It's just an example. You can actually use any indicator of your choice. So you can see that in this case, if you are using the RSI to confirm your exit, the RSI was initially showing a bearish move, right, as we can see. And then suddenly we notice that there was a sharp upward cut, right, indicating that there's probably a pullback. Okay, but this is a consolidating market. This particular period, there was consolidation, right? There was consolidation. So ideally, I would recommend using this indicator in a trending market, not in a consolidation market. Okay, so let us use these trending examples. So here we can see that the price was bouncing off the lower band, which was serving as a dynamic support. And right after this engulfing pattern happened, in fact, while it was still happening, it would have been a good time to enter a buy because the RSI even confirmed the buy. You can see this sharp upward move, how the RSI confirmed that there was bullish momentum at this point. So this would have been a good place to enter a buy after this candle had exceeded this previous candle's high. It would have been a good place to enter a buy, set stop loss below the swing low, and then because this is a bullish trend, you can target the red line as your take profit. You can set your take profit around the resistance zone, or you can wait for any bearish pattern to form. But in order to maximize your potential profit, you can just exit at the resistance point. Okay, so you don't wait for the price to start coming down back before exiting, or you can actually decide to use any other indicator of your choice to confirm your exit. So in the case of a sell, the reverse is the case, right? When you have a sell trend ongoing, you watch out for the price bouncing off the red line, which is serving as a dynamic resistance. So when the price begins to bounce off the red line, when you notice any bearish candlestick pattern, or you get any confirmation of any sort, then you can go ahead and enter a sell. For example, we can see that the RSI here confirmed the sell, right? The RSI confirmed the sell. You don't have to wait for the whole bearish candle to form, because in that case, your risk to reward ratio might become unfavorable. Okay, so instead of waiting for the whole candle to form, just check out for signs. You can even go to smaller time frames and look for signs of bearish confirmation candlestick patterns. All right, you can find that in smaller time frames. Okay, for example, let us see if we can find any. Let's see if we can find any in smaller time frame. All right, so let's just go forward. Okay, so for example, we can see that here we had a gravestone doji. Can you see on the smaller time frame, 30 minutes, we had a gravestone doji. So instead of waiting for the whole candle to form on the higher time frame, that is if you are a swing trader, you can actually go to smaller time frame to get your confirmations with candlestick patterns. All right, when you get your confirmation, you enter your sell, you have a good risk to reward ratio if you enter early. Set your stop loss above the swing high. For your take profit, you can wait for the price to get to the green line, which is going to be the dynamic support. You can wait for the price to get to the dynamic support level, or you can wait for confirmations with RSI. When RSI enters oversold territory, when you have a sharp upward movement, from the RSI, you can use that to exit your sell. So basically, that is it for this indicator. It's quite an interesting indicator. Identifies direction of the trend, show possible reversal patterns, reversal points and continuation points, with the aid of the dynamic support and resistance levels. Okay, so I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.